Alrighty, so today's video is pretty much going to be a case study for Wednesday, April 15th, 2026. Today's trade idea was a buy, and I'm pretty much just going to be going over the whole entirety of the range, where the setups occurred, and how you could have possibly gotten synced with this buy side delivery. So, one of the very first things that I noticed about, this particular Wednesday is that we were already trading within a range. You also have to keep in mind as well that we've been bullish, the past, this is Wednesday, this would be Thursday's trading day, but, Thursday, Wednesday, Tuesday, Monday, and going on a little bit into last week, we've been completely bullish. So when you're looking at things from, a daily, weekly perspective, monthly perspective, you would understand that the entirety of this, whole range back here, it's bullish, and there's no denying that. So when you have confluences such as this, where order flow is on your side, the higher time frame is of course calling for higher prices. It makes it a little bit easier to streamline the approach of what it is that you're looking for that daily range to possibly expand into, versus what it looks like on a macro time frame, such as the 15-minute, 30-minute, hour, 5, 15-minute, 3-minute chart, whatever chart it is that you're looking to use to assess the market for entry, and then follow along with that trend based upon where it could possibly go off of the higher time frame. So the median that's going to be used for today's model is the 15-minute chart. Honestly, you can use whatever time frame you want. I'm always going to use the time frame where the order flow and structure pretty much looks the cleanest for me, to be able to identify everything. Yes, there are certain key factors here on the 30-minute, but it's way more refined, and you can see a lot more definition in the structure on the 15-minute. So the 15-minute chart was the chart that I pretty much used. So again, this here is showing the 15-minute chart of NQ, and this here is showing the daily chart of NQ. And I also have some other charts as well in the background going over market correlation with the indexes as well. So I'll leave that for your studies, but I'm pretty much go over everything anyways. So we were already trading within a range. As you noticed here, after Wednesday, we end up forming this high at 1 o'clock in the morning doing London session, and we ended up forming this low here at 6:30. So notating off the high of the range and the low of the range, you can see exactly where we were working within. If you were to simply take a Fibonacci, and if you know anything about elements to a trade setup, one of ICT's concepts for, dealing with price while it's within a consolidation and what you expect price to do near equilibrium, you would notice that we pretty much had an order block here, resting at equilibrium in this last down close candle before price, expanded back up. And in that order block that we left at equilibrium, we left a small gap here, that imbalance. Price sat within here and traded into that imbalance, filled it, and then we got an explosive move back to the upside at 9:30. Soon after that, 15 minutes later at 9:45, we literally took that high from London at 9:30, and then dropped back down at 9:45, and then shot all the way back up. So all within the same candle, 9:30, we blasted up, shot all the way back down, 9:45. Price just rallied all the way back up to the top side. So I did have these things recorded in the things that I was looking for price, but unfortunately, I guess my recording chopped itself, or I must have mistakenly ended it. So I wasn't able to get that live delivery like how I usually do. But that's cool. For those who've seen me do it live, then you noticed exactly what it was that I was looking for and what price was doing, in this particular time. Delivery was there in a sense, but then it wasn't. As in, let's just say it was very choppy, but it was pulling. Either way, it was still stacking up. Orders were still flowing upwards. It was just all about the entry. And a lot of the times you can see the trade idea, but when there is no volume for you to really get in sync with it, sometimes it's not really worth you trying to gather an entry into a choppy consolidated trade, if that makes sense. So from a higher time frame perspective, 15 minutes and up, this looks ultimately bullish. On a lower time frame, looking at price, you can see a lot of the choppy delivery, the unwillingness to want to go higher, but still, stacking and going higher, if that makes sense. So that's what I identified with the range here. You also had in 1 hour order block back here. All I did here was take the opening and closing range of that orb, dragged it out to the right, found the consequent encroachment of that orb, the CE, and we formed that low, that data low on our candlestick for the day here at 25934.50. So if you come here and you look at that daily candlestick, this low should read exactly the same as this data low. So if you know anything about PO3s, this low here would pretty much be 25934.50. A way to test that is, of course, use two separate charts, one on the 15, any time frame that you're using the IPDA concept on, and you'll see that low reads 25934.50, same as the daily low. So I don't necessarily have to, mark all of those things up or annotate that to know exactly where I am in terms of the daily range. That is the whole purpose of IPDA, to keep you in line with order flow using the concept of time and price. So going back to the 15-minute chart, that orb was identified, 50% of it. Yes, this is a bigger range entirety, really, from this low to this high. Honestly, there's lots of ways that you can use trading ranges to gather a entry into, the concepts. I just use this range here. Sorry, dealing range. So once I've seen those things, order block, nice little 30-minute gap here, and this 30-minute gap also coincides with the 15-minute gap as well. So I didn't, fully refine that gap, but just keep in mind that there is a 30-minute gap here and a 15-minute one as well that pretty much sit within a similar POI, a point of interest. So once we made the data low, price pretty much rallied up. Notice how we pretty much took these short-term highs here at 7:30, and then we traded away, creating a higher low. So how do you know that the bullish has? How do you know that the structure has remained bullish? You're literally following, the fractals. Short-term high, higher high, structure fails to trade underneath this low. We create a higher low, and then we get a stacking of higher lows going up. So just keeping it very simple. After we swipe what's resting above here, of course, the next area of draw would be, at this high. So you would just wait to see if price has willingness to gravitate back up here, if the order flow is clearly bullish, which it did. So there's no denying that. And of course, the outer bounds of the range, you're looking for the market to pretty much trade outside of this range, seeking external range liquidity, but understanding that we have internal draws of the market's range before we actually get to those outer bound areas, those other points of interest that we're looking for price to pretty much flow into. Going back to the 15-minute chart and now understanding that, again, the whole entirety of, this range here, creating that orb, identifying our 9:30 open here. So now at this point, it's just simply just following the order flow. We have our framework for the long. This would pretty much be a market maker buy model. For me, at least it was. So our opening range here at 9:30. If you want to, you can pretty much study the entirety of this range a lot better on a lower time frame. So this is how it looks on the 15 minute. It looks like a order block, and price was triggered off of that order. But once we traded above this down close candles open, that leads for entry. So going to the 5 minute, you can see how it was a complete clusterfuck, but it still upheld. Watching this in real time really helps a lot. How you'll see how the market reacts. Once it's stabbed and poked above the high and came and dropped back down. And how many points on the high was that? Let me see. If I take a measuring tool and just drag it above this high. So it came up above this high about 1 point in a tick, and immediately had reaction going straight back down, creating a big range to the downside, displacement, creating that draw, really that builds settlement in a sense where it might entice you to want to get into shorts, because that did look like a massive bearish move. But unfortunately, this did nothing but just create a draw going lower to extend our range going higher. And a lot of the times, in order for us to really get in sync with that bullish flow, we need to see the market, take something, of course, extend the range by drawing lower, and then we look for the upper ends of that range to be taken once that retracement in a sense is done, and we look for further correction going up. So I tried to get in sync with this. Unfortunately, I broke even on this manipulative handle here, and it left me. I just couldn't get back in. It made no sense for me to try to follow it, especially with it chopping around. Yeah, you can chase it, do what you want. For me, my entry model completely left me. It chopped around. It kept chopping around all day while, giving off short movements of volatility going up, and then completely just sending again and just moving. Either way, it was still a great thing to see my ideal and things of that sort, play out. It's just unfortunate I couldn't make any money fully off of this move. So from entry and looking at this, where I could have possibly just, held my trade, of course, the stop placement will be at this low for about 46 points. And then the target would be the end of day, since we're bullish. That means that our highest proximity on this trade was about 371 points, risking about 46. This is a 1 to 8 RR. And the last initial really target was 24241.50. The reason why this level here is, plays a factor for a target is because this is the level that price is pretty much seeking to trade into on the daily time frame. Looking at this short-term high here, dragging that over to the right, you see that this high comes in at 2641. 241.50, which is pretty much this high. This is where, buy side is pretty much resting from the bigger time frame, and that is what the algorithm seeks and trades into. So any other levels of buy side, of course, can be drawn and mapped here on the daily if price continues to keep trading higher, and the encapsulation of the range within itself. All of these lead to exits, ways that you can possibly get out, and then, of course, maybe a change in the state of delivery once the market gets up into these particular areas and maybe sell off. I'm not here to predict the market. I just trade the order flow. So whatever direction that it's going into, I'm looking for interest in trading in that direction as well, unless things change here. So if nothing changes and the flow continues to remain bullish, I'm seeking the highs on the left hand side of the chart, and then of course any other order flow confirmations that I might have for potential exits and fills on the trade. So that high here was pretty much taken here, and this would have been the full entirety target of this range for about 235 points. Still a 1 to 5, 46 points on risk. That's a great model. So that pretty much explains the reason why I was looking for longs. I really could go more in depth into, the further delivery going up, but it's honestly no need for me to. If you want to study the entirety of the range all the way until close to understand, the bullish PO3 and how you find entries into bullish PO3s, you can go and, look for further study above 26241.50 into how you could have gathered, further entry maybe into this possible long idea. But once it left me here, no reason for me to really necessarily chase it. And it sucks to be able to see these things and not be able to capitalize on it due to just shit. It's just the market. And it's the game we play. So can't really necessarily blame it on nothing. I just didn't win today. So that is pretty much the whole trade idea for NQ. Now I could pretty much move over to, our correlated assets. So getting off of here and moving over to the index charts. So I do keep the framework very minimalistic. Yes, there is a lot more that goes into these concepts. I just don't want to necessarily write everything and notate everything on the charts. I try to keep it clean. A lot of these things, since I'm fairly trained with order flow concepts, I can see these things without having to honestly mark them all up. The only reason why I honestly annotate is just for the viewers' eyes. So you can see the things that I see it in the way that I interpret it, so you can understand why I look for certain things to happen with price and how I'm able to catch these moves literally every single day. For those of you who have not watched my videos before, I've been trading with Top Step for a little bit over a year now, and within a year I've made well over $35,000 trading through Top Step. I also have a live account that has over 13 grand in it. I'm still trading funded accounts with Top Step to this day, and I have Lucid accounts as well. So I'm not new to this. I've been doing this shit for about 8 years. I promise you, this shit works. It will pay you, and it makes you money. So looking at micro NQ, YM, ES, you can see how YM was pretty much doing its own thing. YM had very strong displacement to the downside, while we have NQ and ES pretty much soaring to the skies. So when you're looking at these correlated assets, these charts, these indexes, these are things that you want to annotate and keep in mind, that sometimes the market does not get in sync with each other. They can do opposite things, and you will see at times where it would later, get in sync with price. Wink, wink, price made a low, and, it rallied back up, and it's now trying to follow suit what the other two indexes are doing. So with that understanding within itself, you can see that we created a liquidity void here. I'm not going to spell the whole thing out, so I'm just going to call it LV. And you're looking for the closure of this liquidity void, and for price to pretty much encapsulate the entirety of this range going up and maybe swing back above this high here. So if it does decide to do that, then it would be trying to get back in sync with that bullish order flow. YM lately, I don't understand what's going on with YM, but it's been very late on its draws, or very late on its ranges. I'm gonna leave that for you to study, but if you want to, go study Monday and Tuesday's delivery with YM last week as well, and compare that with the other assets, and you'll see exactly what it is that I'm talking about. It seems like YM is lagging behind. But looking at NQ and then looking at ES, I would honestly say that the trading approach on NQ and ES was a lot better um, than it was. Well, let me rephrase that. The trading approach on NQ, I would say, was a lot better than ES because of the way that it handled itself, giving us the approach for the long. I feel like ES was chopping around a lot more than NQ was. NQ's delivery was the second to cleanest to YM, because YM was a lot less it was really a lot less undecisive. Like, it opened at 9:30 and it just fucking send to the downside and wiped the data low for 246 points to the downside, and it still kept going down past that open for about 429 points. So it did all that within 2 hours. So it was very clean, way cleaner than these two. These were pretty much struggling to give us the same model that we could have caught off of YM if you had just simply traded that. So you see how we opened here at 9:30. That high here within London was taken. Same thing here. We opened at 9:30. That high back here was taken. Price came back above that high again at 7:30. Notice that we traded above that 7:30 high here as well on NQ. So they're pretty much getting in sync, following that ebb and flow, opening at 9:30 and expanding bullish. When price is above the 9:30 open, that is bullishness. Bullishness. That would pretty much mean that that fractal, that PO3, that 9:30 candlestick, um, its opening range is going upwards. So if price is steadily staying above that 9:30 opening, you would literally just look for the trade model above that open, and you just get in sync with the bullishness. It's just all a matter if the market is gonna stop you out from your entry. You don't know. That's why you have to have proper assessment of your risk, and you let the trades flow. So once that was pretty much seen for me, and I was noticing certain things with price, with ES and then NQ. Notice how on the 15-minute here we have a slight gap, and then looking at that same structure here on ES, we didn't get that gap here. It just looks like random whipsaws of price, which is fine. It still did the same exact thing that NQ was doing, though the entry approach is not similar in a sense, but a lot different, I would say. Um, Relatively, it just, it remained the same. So I can't really necessarily explain why, the market did exactly what it did. All I could do is just show you guys how you could possibly get in sync, with the delivery. And I lied. There was a small gap here, very similar to how we had on NQ. So apologize. So yeah, we did have a gap here between 10 o'clock and 10:30, and you see here that 10 o'clock, 10:30, we had a gap here around 9:30 to 10:15. So it's like they were trying to get in sync. They're not fully in sync. I will notice at times where SMT divergence, things of that sort, will form at similar time. I don't want to say time intervals. That's the word I'm looking for. So you will notice at times where like similar legs of structure or SMT or things of that sort will form at certain time intervals, and you can use that as well as confluences to get into trading to get into trading approaches, whether you're long or short. This was a buy day, so anything you would normally see on your typical days where you buy, you just look for those same approaches within the indexes as well. So I do like utilizing the indexes a lot. Um, they do help me further get in sync even deeper with the understanding of why I should be looking for longs and not necessarily looking for anything else. So pretty much explained the entirety of this trade. Everything else now is just following suit, which is going higher. Again, YM pretty much did its own little thing, so not really necessarily worried about this. It's now trying to get in sync with that bullishness. So what I will do is just take the YM chart off, since it had nothing to do with NQ and ES, and just leave these two charts on the screen. So hopefully this helps. So yes, did it disappear? Yes. Well, bump it. I'm not going to take it away because then it's going to remove the drawings. So I'll leave it as is. But just keep in mind, just remove YM out of your head for right now. Just know that, on YM, we sold off, and on NQ and ES, it stayed bullish. So the structure, you usually look for it to stay in sync for us to show us the same signs that it's showing here in terms of its structure, like this high here at 1215, and then looking for that same high here at 1215. You see how on ES, we traded above that 1015 high, swiping buy side, and we did the same thing here on NQ. So this is how you know that the dexes are bullish. You look for bullish trading approaches. You get in sync with that model, and you take it higher to wherever it is that you're looking for your possible target to be. And if you base it off of the higher time frame, of course, it would always be assessment of the daily. Then, that high back here is short-term high, or maybe even, the opening range of, the order block back here. These could be your possible exits on your fill. And it's a very simple thing in terms of streamlining your approach into a trading direction. The thing that really makes this shit hard is, I would assume for most people, is being able to gather an entry and to sit within the trade without fear of it flipping on you. So that level, 26325.75, that ended up getting hit here at this is 1500. So if 12 o'clock is noon, 1300 would be 1, 1400 would be 2, 1500 would be 3 p.m. So we pretty much hit this target here at 3 p.m. in the afternoon, and it has never came back down ever since. We've just been remaining bullish and just going higher. So that's pretty much all I have for you guys. Honestly, it wasn't a hard approach, at least with me interpreting it. I understood exactly what was going on, tried to get in sync with it a couple times, just could not gather an entry, so I just left it alone. I don't like gambling my entries and just repeatedly trying to get into something that I see, no matter how good it looks. 1 or 2 trades, can't catch it, leave it alone, come back another day. I've been taking 1 or 2 trades for so damn long and making as much money as I make. It makes it, I'm just looking for consistency. So long as I can have consistency in my trading and my entry approaches, the money would just follow. There's no reason for me to gamble off of a long, because sometimes these things can change, especially when we trade into these higher draws, these higher point of interest. You will see a lot of times where the market will have these false breaks, these rallies above, and retrace, and you don't want to get caught, especially trading in the upper quarters of a daily PO3. If you're going to do that, you have to wait for a retracement. Usually it's very strong, but when you do get that retracement, now you have a whole entire new range that you're dealing with and that you can focus on, and you can look for, an entry approach into the trade and get back in sync with it going up even higher. So that's all I have for you guys today. Hope you enjoyed this call and this understanding of pretty much what we did on Wednesday. This was a bullish day. This was our opening after midnight from the algorithm's perspective, the low of the day. What was the high? And price has continued to just keep creating a higher end draw of the daily candlestick over and over again, until we finally ended up getting that retracement away from it after we traded into that previous point of interest for buy side, which is the short-term high here. Traded away from it, created a range for us, a new dealing range for us to pretty much focus within, which is here. And I'll take this away and then make this green. And in a sense, if there was some type of entry approach and you have your new dealing range, you're looking for price to go higher, same approach, same model, elements to trade setup. If you understand those 4 market conditions that the market goes through over and over again, this would pretty much be the form of a reversal. And when you look for reversals in prices, of course, a hunting on stops. And once we have that hunt on stops, you look for the market to pretty much participate in a newer trend direction. So it did exactly just that, trading within the opening range of this orb here on 1015, sweeping low within that range that we identified, from this high to this low. So this is what the previous range was. I like looking at price fractals in a sense of where the true trend actually started, the handle, and that's how I'm able to pinpoint my reversals and things of that sort. So once that happened, price, of course, always has a reaction after it takes something of importance, and from there we just been rallying up. Change in state of delivery here from the sell side of the curve, working itself back up into the buy side of the curve. We have that shift in market structure, and if this is the type of trading approach that you would look for, you would pretty much be taking along here, with a 50-point stop, whatever it is that you're using for your risk. Usually you just do, the last volume node of the closure of price, because wicks truly do not represent anything. If you know, you know. But that would have gave you a 39-point stop, and your target would, of course, been the higher high that poked above. Uh, it would be this high here that stabbed above this resting buy side from the daily. This would be your target on the range. So if we're forever trading internal to external ranges, then you just look for that same ebb and flow to happen over and over again. Every single time the market is bullish, it always topples the higher high, because as the higher end of that candle, price is bullish, so it's going to keep seeking the highs until it's had its fill and then closes for the day, and we end here bullish. So all the way from back here, that was our open, our low, our close. This is a bullish day. This is a bullish model. These are some of the approaches that you can have behind a bullish model to pretty much get in sync with the price delivery. And from this entry here, even though you would probably exit here for about 86 points, it went all the way up here for about 210 and then retraced and closed. So still a 1 to 5 RR, 210 points if you actually held it all the way through, and we're looking for these things to happen here. And yeah, that pretty much explains the trade in a whole. And if I add these same levels, I could here, just to see exactly where this orb is on the day. I believe I can add the chart link, erase that, then add a line. There we go. Stretch that line across. Your exit pretty much would have just been here, and you would have been out of the trade for about 159 points in a tick, a 1 to 4, and you're done. This is your possible exit, and you don't look for anything else. Anything else past this point is pretty much, greed. You have to be able to secure something off of these positions, even though you know that it can continue going higher. But again, I'm not going to tell you how to manage your own trades. All I can do is just give you ideas on what you could do for your own trades. So that's my approach. That's my analysis. The day was bullish again. Those are the concepts that I'm pretty much utilizing to stay in sync with the bullishness. These are the things that I saw. These are the levels that we traded into, and this is where we're possibly going to end up going even further, on the day. So hopefully you guys are paying attention to these things that I'm pretty much annotating on the charts, and this gives you some type of framework to, maybe trade going later on into the week. Who knows? You might just remain bullish these next couple days. Might not. We'll see. But stay tuned. I'll be posting more videos and things of that sort like this, that at least put something on my YouTube, because I usually don't post anything on here. So, toodles.